Let's take a look at Huntington Bank because it's getting a price target raise this morning following the bank's investor day, where it touted its plans for profitability and growth. For more, I want to bring in Steve Steinour. He's the CEO of Huntington Bank. Steve, it's great to see you. So certainly there was a lot to be encouraged about from your investor day, some of the announcements that were made, the growth trajectory there for Huntington Bank. I'm curious what that tells us just about the macro backdrop right now and how constructive it is as we head into the rest of the year.
Well, we think that the backdrop is quite constructive. We had a great year last year, a solid second half, and then a fabulous fourth quarter. Number one loan growth, number one deposit growth, record fee income for us in the fourth quarter. And we came into this year with a lot of momentum, pipelines, backlogs, if you will, that were near records. So we believe the economy is performing well. Obviously, the jobs report this morning reflects that. We saw that in holiday sales generally. And so with the administration in place and some of the appointments now coming through, we believe we were in for a very good year and potentially a very good couple of years.
Steve, what about on the heels of this jobs print this morning, the fact that it was another overall strong report? A lot to like within those numbers has, of course, reignited or restarted the conversation that maybe the Fed is not going to cut rates between now and the end of the year. Is that bad for your business? What does that ultimately mean for Huntington?
Look, I don't think there'll be a lot of impact either way. What we're talking about is a marginal change in the timing of rate cuts from maybe July to September. Largely, the expectation now is that rates are going to be about where they are today, plus or minus a little over the next year or so, and then a trend line that'll bring them down a bit. We're not going to see the rates that we saw, these record low rates during the pandemic. At least in my opinion, that's very, very unlikely. So businesses and consumers are getting used to rates at these levels, and they're adjusting in the case of businesses, they're adjusting their expense base and as well as revenue to accommodate it. Generally, I think companies had a pretty good year last year.
Steve, are you seeing any sign of consumer slowing?
Well, there are pockets, and there's a disproportional impact. A lower-income American clearly has been hurt by food and other inflation, but by and large, there's a big swath of Americans that are performing quite well, and we expect that will continue. And certainly, this robust jobs report amplifies that expectation.
We talk about some of the growth opportunity that lies ahead. One of the key themes during the investor update yesterday, when you talk about some of those projections and that rapid growth, what does that mean just for your overall footprint? And I guess where are you identifying those opportunities and the ability to gain market share, especially against some of your larger competitors?
Sure. If you back up to like the Silicon Valley failure, a couple years ago, a number of regional banks and others pulled back. They went on what were called risk-weighted asset diets, a term that was new to the industry. We had very strong capital. Our liquidity was best in class, any bank, $50 billion or more at the time. And we were confident in our credit, and we had earnings to support the growth. So we actually leaned in. We opened up operations in North and South Carolina, as well as Texas, and we added 8 specialty banking commercial verticals. So it's been a lot of investment, a lot of change, and a lot of growth as a consequence of that. And that posture generally, the cores performed very well, and then we have these new growth engines. So we're doing well here in the Midwest, particularly in the central Ohio area. Generally, but in terms of economic growth and expansion, you'll see continuing new announcements of companies moving in. Anduril was announced, I think it was 2.5 weeks ago. Great new defense sector investment of size. Under roof, when they're complete, there'll be 90 football fields of manufacturing for Anduril. So we have a number of positive announcements locally and throughout the Midwest. And then a number of our businesses are national in scale. We're the 5th or 6th largest bank equipment financer. We're the number 2 in terms of distribution finance. We're the largest SBA lender. We do a lot with auto. I think we're certainly top 10. I don't know exactly where we are at the moment in that context. So we have scaled national businesses that we operate as well. And we're getting growth from all of them.
Steve, when you take into account the new Trump administration, looser capital expected, a more friendly regulatory environment, What does that mean for your path forward? Is M&A potentially on the table as you continue to grow?
Well, we set our capital targets. We're consistent. We manage those capital targets irrespective. They're more conservative than what regulators look for, and we think that's a prudent way to run the company. The same with liquidity. So there's no real impact that we're expecting or were expecting under even the old regime at this stage. Now, in terms of the regulatory environment getting more constructive, I think that's good for the industry. It'll certainly be good for us. And I believe it's good for America because that means, we're at the center of commerce. We make things happen in the business community as well as support consumers. The regional banks, super regional banks like Huntington, are the prime source of small business lending. We're the #1 SBA lender in the country, as an example. And so it's really helpful to us, but also to America broadly, to put us in a more front-footed posture doing more business.
Steve Steinour, it's great to get some of your time. Thanks so much for taking the time to join me here this morning.
Thank you very much.
Of Huntington Bank. Thanks, Steve.